Hi everyone, today in this video we are going to discuss about the accounting treatment of goodwill at the time of admission of any partner. Here we will understand two types of goodwill. First one is the book goodwill. Book goodwill in the sense that goodwill is known as purchased goodwill. According to the accounting standard 26 defines about the purchased goodwill as an intangible asset, and this goodwill will be debited from the partner's capital account at the time of change in profit sharing ratio, or at the time of admission, or at the time of retirement of any partner, or at the time of death of any partner. This book goodwill will be debited from the partner's capital account. Now the another type of goodwill which we have to do the accounting treatment, which is self generated goodwill. As we know that goodwill is an intangible asset which enables a firm in higher profit than the normal profit. It arises due to efforts of the partners in past. This goodwill will be known as the self-generated goodwill. At the time of admission of any new partner, old partner will compensate or sacrifice their profit sharing ratio. So for the compensation of their profit share, the new partner will bring an amount for fulfillment of this compensation, which is known as goodwill or premium for goodwill. Now what would be happen here? Here you will understand six cases for the accounting adjustment of this premium for goodwill or goodwill account. See here, first case is that goodwill or premium for goodwill is paid privately. Privately in the sense when goodwill is paid privately by a new partner to the sacrificing partner. Suppose here A and B are partners. C is admitted into the partnership business. After the admission of C, only B is sacrificing here. C negotiated with the B that any type of compensation we will pay you in the form of goodwill as privately. So this, if there is any amount of goodwill paid by the partner, incoming partner privately, here there will be no any general entry, no any entry we will pass here in the books of account. Now come to the next case, which is goodwill is bought in cash or by check by the new partners and is retained in business. Means here you are bringing the goodwill in cash form or check. If you will bring goodwill in form of cash or check, then what entry you will pass here? We will pass here entry cash or bank account debit to premium for goodwill account. Premium for goodwill account. This entry we will pass for bringing of goodwill. Narration you can write here being premium for goodwill bought by the incoming partner, bought by new partner, incoming partner, like this. Second entry what we have to pass, any partner is bringing the amount of goodwill. This amount of goodwill will be helpful for compensating the sacrificing partners. So another entry that you will pass, which will be premium for goodwill account debit to sacrificing partners capital account. Partners capital account. In which ratio? Sacrificing ratio, you will distribute this amount of goodwill. Now come to the third case, which is goodwill is bought in cash or by check by the new partner, is withdrawn by sacrificing partners fully or partially. Here the goodwill is retained in the business. It means the partners are not withdrawing the amount of goodwill. Here little bit change. Partner may withdraw the amount of goodwill fully or partially. He may withdraw the amount, full amount of goodwill, or he may withdraw the partial amount of goodwill. Then what entry you will pass here? First and second entry will be same here for the third case also. And Another one entry we will add here for the third case, which is he will withdraw the amount of goodwill. Then for withdrawing the amount of goodwill, we will make an entry sacrificing partners capital account debit, sacrificing partners capital or current account, whichever will be mentioned in the question, to cash or bank account. This entry we will pass for the fully or partly withdrawal. 1 and 2 entry will be as it is for the third case also. Now come to the fourth case, which is goodwill is brought in kind. Sometimes it may be happen that the partner may bring the amount of goodwill in the form of any asset, not in the form of cash. He may be bring the amount of goodwill in the form of few machinery, buildings, land, stock, debtors, like this. He will bring as a form of goodwill. Entry you will pass here. We will pass here asset account debit to premium for goodwill account. Because the partner is bringing the amount of goodwill in the form of asset. If he or she is withdrawing in the form of cash or check, then cash or bank account debit. If he or she will bring amount of goodwill in the form of any asset, then asset account debit to premium for goodwill account. And second entry will be as it is, premium for goodwill account debit to sacrificing partners capital account. This is the case fourth. And in case fifth, when a part of goodwill is bought, here what would be happen that the new partner will not bring the full amount of goodwill. He will bring the part amount of goodwill. It means, just for example, suppose the goodwill amount is how much? 10,000. This 10,000 amount the new partner have to bring, but the new partner will show their incompetency and he may bring 8,000 amount. Then what would be happen here? How you will compensate this 2,000 amount of goodwill? Here you will compensate this 2,000 amount of goodwill from their capital balance, because new partner is also bringing the capital. Goodwill is the additional thing. Capital, without capital we cannot admit any partner into our business. So this 2,000 amount will be adjusted from their capital account. Entry you will pass here, cash या bank account debit to premium for goodwill account. Premium for goodwill account. Here 10,000 is the goodwill amount that you have to bring, but you are bringing how much? 8,000. Then 8,000 amount we will enter here. Remaining 2,000 will be adjusted from their capital account. Now the second entry that we have to pass, which will be premium for goodwill account debit incoming partners current account, incoming partners current account debit to sacrificing partners capital. Partners capital account. Here incoming partners current account debit, it means this 2,000 amount we are taking from the incoming partner. This 10,000 will be adjusted here as it is. 10,000 will be credited to the sacrificing partners. Remember here, if new partner will not bring the full amount of goodwill, then the partial amount of goodwill will be adjusted from the capital account of the new partner. At last, when the new partner does not bring his share of goodwill, if he is not bringing any amount of goodwill, then what we will do? We will adjust this amount of goodwill from the capital account of the new partner. As it is entry, we will pass the entry new partners current account debit to sacrificing partners capital. Capital account. Six types of cases will arise at the time of admission of new partner for the treatment of goodwill. In next video, we will learn the practical problems related to this topic.